Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shail Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street, where it couldn't have been better. 428 points higher on the Nifty, 24,170. We are at the day's high point. There are huge volumes being seen, several pockets that are supporting, large caps that are contributing to sharp gains, and it couldn't have been a better start to 2025 right there. If you look at the key contributors, auto space, look at the kind of rally that we've seen. The index itself is up by 3.5%, and several stocks like Eicher Motors, which is leading the Nifty right now, is up by over 8%. You also have stocks like Maruti Suzuki that has rallied 5.5% just in a single day. These were all the stocks that were lying lower in a huge consolidative zone, but after the December update, these stocks are sharply higher in trade. Along with this, the IT pack, look at that as well, 2.2% higher, and several of the stocks within this basket are also supporting the strong move on the Nifty, including stocks from Indices. You also have Tech Mahindra, you have TCS, all of these stocks that are buzzing in trade from the IT pack as well. Now, barring the media stocks, rest all of the sectors have pulled up into the green. Even the broader markets, mid-caps are up by 0.8%, and the small cap index is also hovering about 0.5% higher in trade. A strong move that can be seen across the board. Good afternoon, Shell.
Good afternoon, ladies and gentlemen. This is, make no mistake, the start of a fresh rally. You will see the Nifty test about 24,290 in the short term, and any 2 percentage point uptick on a particular index after a very sharp correction points to a new trend. Look at the Nifty Auto Index. We were somewhere like 27,694 in September. From then on, it's corrected down to about 22,500. That's a 20% correction, and in the midst of all the gloom and doom that we saw in December, data not being up to the mark in terms of online registrations and all, the index seems to have bottomed out today with a very sharp rally. Therefore, the front line will make sense in passenger vehicles, Maruti, in commercial vehicles, Tata Motors, in two-wheelers, maybe Hero, Honda, Bajaj Auto and Eicher. So please keep an eye out on these, and with them are moving the entire auto ancillary space. Look at Varroc Engineering today. It's at 643, and the gains are very, very strong on Varroc. 7.8% higher on Varroc. On somewhere on 12th of December, this counter was at 521. So from 521 to 640, you've seen a 120 point uptick, and Varroc is not the only counter which is up in top gear as far as auto ancillaries are concerned. Munjal Auto is up 7.5%. Lumax Technologies is up 4.5%. Talbros, Bharat Care, Auto Industries, Motherson Sumi, all of them up between 2 and 4%. So this is one sector, and IT. We need to look at IT from a very different angle of the rupee depreciation. The IT index itself has surged very, very sharply. This is a 2.2% rise. 1,000 points is what we see on the Nifty ITEX, and please note, a 2.2%, more than a 2% rise in any index after a very steep correction is the beginning of a new trend. So please keep these thoughts in your mind, and of course let me mark you the advanced decline ratio, 1600 to 800, so easily 2:1 favoring the bulls. And in terms of record highs, you have many. Now, Policy Bazaar, Kalyan Jewelers from the gold side, Welspun Corp from the oil gas pipelines that come in, Lupin from the pharma space, Lemon Tree from the hotel space, Anant Raj from real estate. So it's a collection of stocks that has gone up very sharply. And Sakshi, when was the last time you saw an 8 percentage point tick on Eicher Motors? And in that one single move, it's at a record high.
Absolutely.
So that's how it is, ladies and gentlemen, the beginning of a new trend. in the midst of all the gloom and doom. And remember, good prices and good times don't come together in the markets. It's the exact opposite. In absolute pain, you need to buy good quality stocks. Sakshi.
Right. This is just the right time to welcome our guest on board. Nilesh Jain, Head and Vice President of Technicals and Derivatives Research at Centrum, is now joining right in. Warm welcome to you, Nilesh, and good to have you with us. Happy New Year. And it indeed is a Happy New Year, because look at the kind of gains that we are seeing in the markets for far too long, nearly 3.5 months. These gains had been, avoiding all the investors. Investors had been waiting patiently for such returns to come back. 24,180 right now. On a single day, we've seen such a sharp rally. Will this sustain is the big question now.
Very good afternoon to you, Sakshi. First of all, wish you a very happy new year, and to all the viewers as well. Well, indeed, it's a very good start for the year 2025. For the second consecutive session, we have seen back-to-back candle, bullish candle. And today is an important day because the Nifty not only cleared its 200-day moving average, but also making an attempt to surpass its 21-day moving average, which is placed at 21,192. So 24,200, roughly we can say that's the next immediate hurdle. Sooner or later we might see a breakout above that, and Nifty is heading towards 24,500 mark. I think it's a beginning of a pre-budget rally, which we might see from here. And we expect Nifty to move towards 24,800, 25,000 as well. Today, we have seen some positive development. Not only we have witnessed a short covering from 24,000, 24,100, 24,200 strike, but also the volatility index India VIX cooled off 5.5%, and it is moving towards the comfort zone for the bulls. Apart from that, if you look at the Bank Nifty, where we have seen a strong support that is coming at 50,500 mark. So overall, Nifty and Bank Nifty index both are looking positive. Nifty is looking positive for 24,300, 24,500 kind of levels on the upside, whereas Bank Nifty looks like heading towards 52,000 to 52,500 zone.
Right.
Namaste, Nilesh ji. Nilesh ji, one very quick view on Eicher Motors. I understand it's an 8% uptick, but is this the start of a new phase on the maker of Bullet, or is this something that you would like to avoid?
Namaste, Shalinji. See, Eicher Motor, it's already up close to 8%. So after this kind of spurt, it's not advisable to chase. Better to wait for some dip to get into this particular stock. But as far as trend is concerned, the trend looks positive. We have seen a good breakout coming in after a consolidation of close to 7 to 8 months. So 7 to 8 months, it has been trading in a rectangle formation. Today, we have seen a breakout, and target for that particular pattern comes around 5,400 to 5,500. So there is still some more room left. But the risk and reward is not favorable at current level. If somebody is already holding the long position, can continue to ride this particular move and keep a trailing stop loss at 5,000. On the upside, as mentioned, 5,400 to 5,500 is something that we might see. Nifty Auto index as a whole is looking strong on the chart. It looks like it has formed a good bottom formation, and the Nifty Auto index is heading towards 24,500 to 24,800 zone. Support is at 23,500.
Okay. Any key reasons that Nilesh you can spot behind the rally today, and will this continue to spur the market is something that I wanted to understand. What are the key reasons according to you?
So Sakshi, you are talking about overall market or Nifty Auto?
Market.
Okay, so market, see, there are multiple reasons. First of all, there has been a lot of short build-up. The rollover data were not promising. The rollover data were also lower compared to its 3 months average. And there has been a lot of short build-up. Now today, we have seen a huge amount of short covering move. Apart from that, if you look at the event, there was some expectations of a Santa Claus rally that didn't come, but now I think it's very much likely that we may see a pre-budget rally. So next big event is the budget, and Q3 numbers will soon start from 15th of January. So there are high possibility and prediction in the market. Then we might see some positive numbers to come in. Apart from that, as mentioned, the volatility index is cooling off. So there are multiple reasons, and we have been underperforming recently in last 3 4 months. So I think it's time for our market to outperform.
Time for our market to outperform, right there. Okay, got that. What about the IT space? That's also like rallying pretty sharply, Nilesh. How would you really look at that one contributing to the gains? And do you think 2025 will be a great year for IT yet again, or do you think it could be too late an entry for new investors?
So absolutely, the IT index has been one of the outperformer, and recently we saw where the market were struggling to find support. The Nifty IT index somehow provided that support. So overall, I think there is still some more room left in Nifty IT index as far as index is concerned. Currently, it is trading at 44,350. Our target for Nifty IT index comes around 46,500 to 47,000. That's short to medium term target. But as far as 2025 is concerned, I think the Nifty IT, Nifty Pharma are likely to do well. Apart from that, we also bullish on financial space as a whole. We also mentioned about Nifty Auto Index. So these are the few indices where we can continue to maintain our positive outlook for 2025. The other sector that we are liking is Nifty Realty as well. So yes, combining all, I think uh, the Nifty and the overall market seems to have bottomed out. Although it's too early to comment, but we are getting some initial indications of short-term bottom formation.
Right. And a very, very sharp breakout happening on Lupin. Sakshi, we've been following this stock for many, many months.
Yeah.
And all that faith that investors have reposed in Lupin now coming to the fore. You have a record high today at 2384, up almost a percent. And this is accompanied by a very, very sharp rise in volume. Remember, on Thursday and Friday, which is that would be I think 28th and 29th of December. You had 30th and 31st of December. You had very, very heavy volumes on the counter, very strong delivery patterns, and this is how it is today. Extremely good views coming in on the charts. Let's get Nilesh Bhai in on Lupin. Almost 2400 for you, Nilesh ji. What are the charts of Lupin telling you?
So the chart are looking very strong. Lupin gave a good breakout on Monday, and this has been almost 7 consecutive sessions of gains for the Lupin, and it is trading in uncharted territory at all-time highs. So structure-wise, looks strong, and on the upside, it may test 2500 to 2550 from a very short-term point of view. Can be added at current level, and on declines, one can keep a stop loss below 2285. So that was a breakout level. That should be the stop loss for the long position. So within pharma pack, apart from Lupin, Glenmark Pharma is also looking strong. It seems like it is forming a rounding bottom formation. And at current level, Glenmark is also looking attractive. One can keep a stop loss below 1600, and long position can be initiated for the target of 1680 to 1700.
Okay. Let's look at some of the other pockets that are doing very well in trade today. NBFCs sharply higher. Sundaram Finance is up almost 11%. Dhani Services is up 10%. Credit Access Grameen up 7.7%. Of course, Bajaj Twins we've been marking since morning, 6.5 to 7.5% higher. Shriram Finance up 6%, 5% for Nuvama Wealth, IFL Finance, Aditya Birla Capital. All of these stocks are actually buzzing sharply higher. What looks good to you within the NBFC basket, Nilesh? Would you chase any?
Absolutely. So NBFC space as a whole, no doubt today it is outperforming. But within this particular space, Shriram Finance is something that is looking attractive to me. And on the upside, the target comes around 3200 to 3250. It can be bought with a stop loss below 2980. So Shriram Finance, particularly this particular stock, looks positive on the chart.
Okay.
Pharma is what is ruling the roost. Look at Glenmark, now 1641.7% higher. Let's track the all-time high on Glenmark. This has been an outstanding quarter. This has been an outstanding stock for the last many years. Remember, in February of 2024, the counter was at 836 rupees. It topped out at 1800 in October, and from then on, it's a lot of profit booking, but all signs of hectic activity ahead. 1641 and 2% higher. What are the charts of Glenmark telling you, Nilesh ji?
So Glenmark is a buy, as just now I've given my recommendation. So Glenmark, apart from Lupin, is looking attractive for 1680 to 1700 target. One can keep a stop loss below 1600. Today we have seen a good rounding bottom formation breakout on a small time frame chart. So it looks like it is heading towards a position target of 1750 as well. But keeping a short term target of 1700, this particular stock can be bought with a stop loss below 1600.
Okay, got that. Apart from this, let's again look at some of the other interesting names. The mid-cap space has also recovered pretty sharply from the lows today, almost 1% higher. Let's look at some of the interesting stocks right there. PB Fintech, that's the one that's buzzing. SBI Cards is buzzing in trade. You also have stocks like Jubilant Foodworks that's buzzing strongly in this space as well. That's how some of the broader market gainers are. L&T Finance, Ashok Leyland, Tube Investments, that's buzzing in trade. Federal Bank, NMDC, these are some of the stocks that are buzzing. Nilesh, mid-caps, does anything interest you at this point?
Right, so couple of stocks that are on my radar. First of all, Policy Bazaar. This particular stock is looking very attractive given the kind of breakout we have seen today. Good volume attraction can be seen with a good breakout from a falling channel. So looks like this particular stock is heading towards 2300 to 2350 kind of target on the upside. So can be bought with a stop loss below 2150. Apart from that, PCBL. PCBL is another stock that is looking attractive. We have already given our buy recommendation to our client on this particular counter for upside target of 480 to 490. One can keep a stop loss below 458. Apart from that, Divyani International is another stock which is looking strong on the chart. Also, this particular stock can be added for the upside target of 195 to 198. One can keep a stop loss below 186.
Okay. Let's look at the volume picture today, Sakshi. I don't know after how many months you have Bajaj Finance as the top traded counter on the National Stock Exchange. FIs are back. 1933 crores is what is the transaction value on Bajaj Finance. Look at how action has returned to Reliance and HDFC Bank. Remember, we were marking volumes of between 800 to 1200 crore rupees over the last 5 or 6 trading sessions. Well, today Reliance is up 1.65% and 1600 crores has been traded. Look at how sharply HDFC Bank has moved up in terms of volumes, almost 1290 crores. And in the top space are Tanla, which also moved sharply yesterday. Yesterday's volumes were 1600 crores on Tanla. Today it's 1800 crores. This is a platform from the software space. 758. You have Maruti 1360 crores, Aisha Motors 1300 crores, and of course M&M. M&M is about to hit a record high. This one is coming to you, Nilesh. What are the charts of M&M telling you at 3210?
So M&M is a buy. We also mentioned about Nifty Auto Index as a whole, which is looking very strong on the chart. Within this space, M&M also continues to remain our preferred bet. So this particular stock looks like heading towards 3300 to 3350 from a January series expiry point of view. But back-to-back positive candle we have seen, it is up close to 5.5% this week so far. So better to buy on dip, keep a stop loss below 3100. Ideally, buying range should be in the zone of 3150 to 3170. And target comes around 3280 to 3350. Apart from that, TVS Motor is also looking attractive within auto space. So we expect a pullback to continue towards 2550 to 2570. One can keep a stop loss below 2460.
Okay, got that. So that's as far as some of these stocks in the buzzing zone are concerned. What else can we discuss with Nilesh? Let us point out Zomato. That's up 2% to 81.8 right now. This has been an outperformer clearly for 2024. Nilesh, what's your expectation on this one going forward?
So overall, Zomato is looking very attractive given the kind of rebound that we have seen, a V-shaped recovery, and then it has been in an uptrend since a long time. So overall, the particular stock structure looks positive for 2025 as well. Positional target from next 1 year point of view comes around 350 to 400, but from a very short term point of view, I think the stock is heading towards 300 plus kind of levels, and it is likely to hit a new record high as well. So from a risk and reward point of view, it is looking very attractive. Keep a stop loss below 270, currently trading at 282, and upside target comes around 295 to 300.
254, and what's coming back into action are battery stocks. It starts with Exide and it starts with Amara Raja batteries. Look at AREM. This is a stock that we've tracked for quite a while, Amara Raja Energy and Mobility. It's a 30% correction from its most recent peak of 1780 all the way down to 1200. Ditto for Exide. Sakshi, I remember you and I discussing Exide Industries above 500. Let's see what the price is. I think 425. And Exide Industries, yes. Okay, yes. 600 was the price in this date was somewhere in late June, and now you have 425. So a nice decent correction, and with the advent of auto stocks moving up, ancillaries will move as well. So please keep an eye out on both Amara Raja and Exide, and we'll get Nilesh to talk about his favorite battery stock.
So out of all, one battery stocks looks like bottoming out after a decent correction. That's Exide Industries. So we have already seen momentum that has come into Nifty Auto Index. So there are high possibility of auto ancillary to join this particular momentum. So within this, Exide Industries is something that is looking positive, where we can see sort of a double bottom formation in the zone of 405 to 410. So ideally, that should be the stop loss for the long position. On the upside, we expect a momentum towards 440 to 460. So these are the target on the upside. One can keep a stop loss below 410, and Exide can be bought at current level.
That's as far as the battery makers are concerned, and that's in focus too. Let us look at some of the other pockets in the PSU space. Remember, the PSE index is up by 1.5%. Strong moves can be seen across the board, especially in the oil and gas space. Oil India is back with a strong move. I mean, almost 6% higher, almost 4% uptick for ONGC as well. Coal India is also buzzing in space. You also have several others that are buzzing in the power space too. So the energy power basket coming back in focus, Nilesh. Where would you keep your attention?
So within this space, oil and gas is something that is looking positive and attractive to us. So MGL, IGL, both the stocks are making an attempt to fill that particular gap that we saw in the month of November. And both the stocks are looking positive at current level. IGL specifically, it looks like it is heading towards 440, 445 kind of levels on the upside. At current level, IGL can be bought with a stop loss below 400. Apart from that, Oil India, today we have seen a good spurt in this particular stock as well, with higher than average volume. So we can expect this momentum to continue towards 480 to 490, and 445 should be the stop loss for the long position in the Oil India.
Okay.
Sakshi, trend is shaping up. This is your favorite stock, and very nice chart that is right in front of me. Strong volumes, and what's really interesting is that ever since we had, I think this is 7th of November, the counter's gone nowhere. So this is an interesting stock to watch for the moment at 73.22, and it's regaining its mojo. What else is moving? This is, I think, Motherson Sumi. I think this is the wire company that is moving. M Sumi, yes. This is the wiring company. 59 rupees today, 1.5% higher. The most recent high was 80 rupees. So 80 minus 60 is 20 on 80. It's a nice 20% correction that's happened on this one. And with the advent of strong buying happening in both auto and ancillaries, Motherson Sumi wiring is also kicking up good shape. Kirloskar engines, better known as Koel, this is also doing pretty well on the charts. Let's see what are the charts telling us. We've seen a very strong high. I think 1500 is what I remember. Yes, 1500 is absolutely right. 1453 was the most recent high, and now at 1048. So 33-point correction on Kirloskar oil engines. Nilesh, I'm wondering whether you track this chart or not.
So yes, we have been tracking this stock. We have seen a decent correction. Now the only reason to chase this particular stock is that it has found a very strong support at 1000 level. In the month of October, on 20th of October, the stock made a swing low of 1001. So that's precisely that's the immediate support. So from a risk and reward point of view, I think Kirloskar engine, this particular stock can be bought for upside target of 1100 to 1150. If it breaks below 1000 level, then we can expect further slide toward 900 as well. So as of now, with a strict stop loss below 1000, this particular stock can be bought for the upside target of 1100 to 1150.
Okay, got that. So that's the move that's coming in. All right, let's look at the kind of move that we are seeing across the board. It's only strengthening, and how on the Nifty. Look at it. It's the day's high. We are now up at 24,190 odd levels right there. So strong moves that can be seen across the board. 5,300 for Eicher Motors, it's up 8.5%. 8% uptick for Bajaj Finserv. Bajaj Finance up 6.5%. Maruti up 5.5%. Strong move across the board. Let us now look at one more interesting space, and that is the consumer durable space as well. 1.7% higher for the index alone. You have Century Ply up 5%, Titan up 4%. Remember, the gems and the jewelry space is also buzzing. We'll take a view on that as well. Kalyan Jewelers is also buzzing in trade. So let's take it in two different fashion. One is the white goods and the capital goods space, and the other one will be the consumption space and the gems and the jewelry space. So let's first tackle the white goods, consumer durables. Which one would you prefer at this stage, Nilesh?
Within consumer durable space, as you mentioned, gems and jewelry, first of all, I would like to make a comment on that. Kalyan Jewelers is something that that is on our radar as well, because the structure is looking very strong, and we expect this particular momentum to continue towards 850 to 900, and stop loss somewhere can be placed around 745. Apart from that, Titan, you mentioned, Titan is also making a very strong comeback after hitting lows about 3240. So this particular stock is likely to test 3500 to 3550 in a very short term time frame. Within from a January series point of view, I think we have seen a good build up on the long side. 7% OI addition can be seen today, and a good volume participation as well. So yes, this particular stock can also be added in a staggered manner for a positional target of 3650 to 3700.
Okay, well, on that note, Nilesh, we'll thank you for being with us on this very special trade. We've actually seen a very strong move coming in and starting the new year with such a high note. It's a good thing to have you, look at in the markets right with us. So stay tuned with us. Keep coming back on Business Today Television and keep guiding all our viewers with your insights. Thank you so much for being with us. All right, we'll also now welcome Swati Hotkar. She's the AVP of Technical Research at Nirmal Bang now to be with us. Swati, warm welcome. Happy New Year to you, and hope this year turns out to be a great one for you, for your loved ones as well. Tell us, how was the party on New Year's, and what is the New Year resolution that you've taken?
First of all, Good afternoon, Sakshi and Shelchi, both of you, and happy new year to you as well. The resolution is nothing but what the analyst can do the resolution to earn the good amount of a profit from the market. That is the only resolution we have just in our life as of now. Since the market are really doing very well, the mood is actually it's very on a positive note in the second session of this year itself. So definitely, the market looks very strong at the current levels.
Namaste Swati ji, Happy New Year, a very warm welcome. Market is looking strong, 2%, 3% gains on indices. Some of the auto stocks are doing 8% like Aisha. What looks good to you? What are you advising clients to buy?
Yeah, on the auto pack, definitely Bata really looks, Escort really looks good on the auto pack as of now, because this particular stock has given a very good kind of a correction, and after that we are likely to witness a very strong up move rally in the near terms. This particular on the, if we look towards the technical chart, Shelji, I believe that the stock has a very strong formations on the technical front. Also, the interesting fact that it is trading. Was trading in the downward sloping channel after such kind of a correction from 4400 to 31 levels. I believe the risk reward ratio is very favorable. After such kind of a correction, we are likely to witness some sort of a bounce back rally on the technical front, which might take a counter towards to at least 3550 and so on levels. So minimum 200 points rally can be seen from the current level. If it's break that level, which is also the resistance provided is by 50-day moving average, any move above that level will extend the rally up to 3800 levels. So if you're looking for any auto pack stocks, definitely Escort looks very good at the current market price.
Okay, got that. So that's as far as the auto space is concerned. Swati, any key sectors that you've identified that you're going to be investing big on in 2025, apart from autos that you're suggesting?
Actually, rather than concentrating on a specific sector, I believe that one should be remain into the stock specific, because sectorial rotation continuously going on into the market. I believe that one should select a right counter or right stock at a right point of time. So I will be interested more into the stock specific investments or say the trading rather than concentrating only on a one or two sector as such, because there are a lot of sectors which gives an opportunity at every other point of time. So better to be a stock specific into this market, because I believe the market will remain volatile in the coming few trading session till the budget comes out. Till the time the market will remain volatile, so better try to concentrate on the stock specific trading.
305, 25 minutes left for this wheel to end as far as markets are concerned on Thursday. It's been a fantastic expiry. Sakshi, it will be very interesting to note whether this very sharp uptick on many indices, including the Nifty, has resulted in shorts being covered on the index level and cash sales coming down. So these will be two very important numbers to look at, because they will signify whether whether FIs have taken this opportunity to press more sales or have they held back. So
Yeah.
my understanding is that you will see lots of index short positions being covered, and of course a very sharp decrease in how net sales have shaped up. Remember, 31st December was 5,000 crores. Yesterday was something like 17,000 crores, 1,700 crores worth of net sales, and the last 10-15 days of December have been consistent sales from foreign institutional investors. Be that as it may, but when Bajaj Finance moves 6.5%, then it signifies a new trend. Swati, your view on Bajaj Finance?
Well, yeah, as of now, Bajaj Finance is currently trading in a very consolidation phase, tight range of 6,500 to 7,500. And now it's on the verge of giving the cluster resistance breakouts, which comes to around 7,500. So any move above more than 100 points from here onwards will change the trend reversal for a shorter period of time. I believe any move above that level will extend that rally up to 7,800. And so those who are having any long position, definitely hold on. The interesting fact that if we look towards the last 3 months data, the stock has given the breakout of a downward sloping trend line. So the overall technical structure is definitely positive. One can initiate a fresh long positions at the current market price as well, or if you're getting any dips towards to 70, 200 and so levels, definitely one can go add on. By maintaining a strict stop loss of a 6,900, I'm looking for a target of 7,800 rupees on a high side.
Okay, got that. Let's look at some of the other pockets also then, which are looking very interesting at this point in time. Private banks, let's look at this one. Swati, how are you looking at the opportunities here? There have been several underperformers in 2024. Would you bet on those, or would you stick with the absolutely the large cap, the top 2 or 3 names again? What is it that your approach will be? You know, we have Bandhan Bank, we have IDFC that has underperformed, IndusInd that's dropped 40%. Do you think the reversal will come in onto these, or is it better to stick with an ICICI or an HDFC or an Axis?
Yeah, as of now, definitely PSU banks has already corrected very much as such. But on the technical front, if we look towards risk reward ratio or the correction or the technical structure, I believe Axis Bank, HDFC Bank, ICICI banks, those three counters are really doing very well on the technical front, and one should stick to those counters which will give a fast return whenever the bank nifty will perform. So these are the candidates which will take a bank nifty on a higher side and good and will give a good amount of a returns within a very short period of time. So it's better to stick into those large cap banks which will give a very good amount of a return. So I will suggest to go for Axis Bank, HDFC Bank, and ICICI Bank. Those counters are really looking very good on every deeps towards to take into your portfolio on a longer side.
309, 21 points, 21 minutes left for trade. And Sakshi, old world favorites are coming back. Look at Cummins Industries. This is a stock which fell below 200-day moving average and is now showing signs of revival. We've seen 4,400, no, 4,300 definitely, 4,200 in July. From then on, we have moved down to 3,200. This is a very nice 25% correction. Old favorites like Sakshi, I think we'll have to mark this one. Can't remember the last time I saw Sundaram Finance rising 12%. Wow. Okay. 502. Ladies and gentlemen, there is absolutely no question on the quality of balance sheet that Sundaram Finance has. This is the start of a new move. Swati, what are the charts of Sundaram Finance telling you?
The chart shows that it has already reached its resistance levels. Today, it has crossed all the three important moving averages, 50 and 100, 200 DMA. From the, if we look towards the monthly chart, from the month of the October, the stock was facing a very strong resistance of 4620 levels. Now, today it manages to touch that level once again, but we need to wait whether the particular counter gives the breakout level on the closing basis or not. If not, then again we might witness some sort of a selling pressure or the profit booking, which might take a counter back towards to 4300 and 4200 levels and so. So those who are having any long positions, I will suggest to book your partial profits, and second partial you can hold on by maintaining a stop loss of 4400 rupees on a downside. If we get any breakout of 4620 on the higher side, the rally is likely to be extended towards to 4800 to 5000 levels. So the view is a bit cautious, but you can just definitely trade the momentum with the trading stop losses.
Okay, got that. Swati, you started to talk about the auto space at large. Even the auto ancillaries are throwing in interesting moves today. I mean, like Munjal Auto, 6.5%. That's the one that's surging sharply. Barak Engineering is up over 6.5%. You have Ask Automotive, that's up 4.5%. Lumax Auto, Tal Bros, Jai Bharat Maruti, all of them are buzzing in trade. What looks good to you within the auto ancillary space particularly?
If we look towards on the auto space ancillaries as of now, Munjal Auto really looks good because this particular counter has already given a very strong correction from 140 to 91 levels. And today, the way the volume has increased along with the price momentum is really very attractive at the current levels. Risk reward ratio is really favorable. So one can go for a long position and chase the momentums, which might take a counter towards to 120 to 130 levels. Currently, the counter is trading at 106. One can go for a long with a strict stop loss of 100 and go for a long positions for 120 target.
312, we have about 18 minutes left, and it's a very, very strong move that now we are tracking on trend. We are 3.7% higher on trend. This is looking good. ONGC has also moved up 3.8%. You have a sharp move coming in on Piramal Enterprises. SBI Life is in great shape. This is how it is. Let me just look at the volume picture today. I want to see what are the volume buzzers on NSE 500. Okay, so it's the how should I say, the empire striking back from the world of NBFCs. Everybody and anybody, quality stocks are up 12%, like Sundaram Finance. Beaten down counters are gaining track. Look at Credit Access, 7% higher, 952. You have a strong move coming into Sundaram that we've discussed. Bajaj Finance is the top gainer on the Nifty, 6.5% higher. Across the space, you see a lot of momentum. Muthoot Finance has hit a record high. So this is a sectoral move that is coming in. Chola Finance up 7%, Shriram Finance up 4.7, M&M Finance up 2.4, AB Capital, you name it, it's in the green. Sakshi, old world favorites, PFC, REC.
Yeah.
When was the last time we marked PFC and RFC? REC, I can't remember, right? So it's across the board rally that is now with us, and these are very good signs.
Absolutely. What else is going to be interesting to talk about with okay, Swati, let's get you to talk about the defense pack. MTAR Tech is up, DCX Systems, Cochin is up 1.5%, HAL is buzzing, we have BEL, Mishra Dhatu Nigam, all of them up by over 1% to almost 4% each. So let's look at this space and help us understand. Ahead of the budget, are you going to be building on positions on any of the defense stocks within this basket?
Yes, as a sector specific, definitely we can initiate a long positions on, especially on the Cochin shipyard and the HL discounters to really looks fixed. Why I'm saying Cochin shipyard, because from if you look towards the last 6-7 months data from the last year month of the June July itself, the stock has given a very strong correction from 3,000 to almost 1,300 levels, and it has given a very strong correction. After that, the stock is under the consolidation phase. So whenever such kind of formation gets formed and consolidation breakout comes in the near term, definitely one should enter into the long position in this particular counter, because risk reward ratio is really favorable. Downside, it has a very strong support of 1,400 and so levels. Upside, I'm looking for at least target of 2,000, so means more than 500 points where really will get 4 to 500 points we will get on a higher side. So Cochin shipyard looks very promising on the technical front. Second one is the HL. This particular counter is not giving much more correction, but it is in a consolidation phase from the last 6 months. Even such kind of a market, we have not witnessed major correction into this. It just a time correction is going on rather than the price correction. So these are the two different things into the technicals as such. So we have seen a lot of a time correction. Now probably we are likely to hit on a higher side the trend, which might take a counter towards 250, 200 and so on. So one should wait for every dips can be utilized to buy this particular counter up to, if you are getting any dips towards to 4,000 and so levels, definitely one should take a long position. So I'm looking for a target of 5,200 to 5,400 within a span of 3 to 6 months. So definitely this two counter looks very promising on the technical front.
Sakshi, RECL. The all-time high on RECL was in August, and it was 654. From then on, it's been 6 months of correction, and today the stock is showing signs of activity on the long side. Many technical parameters coming together. Let us see what Swati has in terms of RECL. Remember, this has been one of the biggest wealth creation from the PSU space between 2022 and 2024. Stock moved from below 100 to above 600.
Yes, sir, you have rightly pointed out that from the 2023 onwards, the stock has given a very spectacular return as well as a rally from 100 to 600 level. Now, whenever such kind of a formation has formed, as of now the stock is under the formation of a flag pattern. We have seen a steep pole, and as of now it is just forming the body of that flag. As of now, we have seen that the stock has formed the cluster support at around 500 495 levels. So as long as it holds that level, we are likely to witness some sort of a bounce back rally, which might take a counter back towards to 570, the level which has been touched in the month of the December itself. So up to that level, yes, definitely one can witness the rally, but not a major breakout as of now. I'm witnessing it is just another consolidation phase. Definitely one can chase the momentum by keeping a strict stop loss for 495. For immediate target will be a 550 to 570 levels on high side.
Okay, got that. All right, one more pocket that I've spotted that Swati can perhaps enlighten us is on the textiles and the apparel space. Again, this has been 2024 was a year when we've seen substantial move on Raymond. And it continues. Okay, so Shell tells me Sundaram Finance is up 20%. We've been marking this stock. In fact, Shell has been discussing this stock for a fairly long time. And today this is now up nearly 20%. Sharp uptick can be seen on this one, 4864. We'll come back to it, viewers. But textiles and apparels is what I was discussing. VIP clothing is up 5%. Kitex garments is up 5%. Raymond is up 4.5%. Today, Go Fashion is also buzzing in trade. A lot of these spaces are buzzing. Remember this entire Bangladesh plus one trigger that was helping the textiles space stocks also to buzz stronger. Again, the move continues. What's your suggestion here, Swati? What should be done?
Hey, Sakshi, frankly speaking, I'm not much more bullish into this particular counter. But if you're asking me to do the comparative analysis between the VIP clothing, Kitex, or the Raymond, I will go for the Raymond as such, because we have seen a very sharp correction in this particular stock. Now it is under the consolidation phase, and it's verge on the verge of giving the breakout of higher levels. So the downside is very limited, but definitely if something comes on a positive side on the budget day as such, then definitely we can likely to witness a strong rally up to 1900 to 2000 levels. So if you're looking for any stock in this particular sector, I will suggest to go for a Raymond, since the risk reward ratio is favorable by maintaining a strict stop loss of 1650 on the higher side. 1900 and 2000 levels can be seen very soon. So the Raymond looks promising on the technical front.
3:20 p.m. Ladies and gentlemen, what a fantastic day, Sakshi, it's turned out to be. You
Absolutely.
remember last week on Friday, I had worn that thick gold chain,
Yes.
and I had said, everything has been now done and dusted, and I have a video to prove it. And I think luck, just pure luck, and some maybe good market spotting is what helped us at that point of time.
And you said
from
that
then
you'll be
on to
wearing
now,
it again on
it's
Friday.
been a wonderful,
so we are
wonderful
hoping that
ride.
tomorrow again you will be wearing it, Shell.
Okay, because you tell me, then I will. And we'll also invite Swati ji to take a look at my growing gold correction, and maybe comment on gold as an asset class as well. Remember, it rose 38% in 2024, and it was a fantastic journey. So some good luck, some good cheer, and some great market spotting that happened on Friday at market today. All luck, I presume, but the harder you work, the luckier you get. This is what I've learnt in markets, and it's been a great ride. Today's rise is accompanied by fairly decent volumes. I'm just looking at two numbers: sharp reduction in FII sales and a sharp cut in shorts that were in place. Let's hope this is how it happens today evening when the numbers come in. But for the moment, Sakshi, it's looking good. I can't remember the last time Sundaram Finance hit 20%. It's just not in my memory. It's not that kind of a stock. And again, as I repeat, this is something that's happening at a multi-month, multi-year low. And this has to be appreciated by the market. And this is an indication of better times to come, especially in Jan, ahead of third quarter. There is this expectation, Sakshi, in the market that the government will sort of unlock the economy, unlock the liquidity that has sucked life out of the economy, and that's the reason why you see NBFC is moving up across the board. Remember, the fiscal stability report came last week, and that is when everything bottomed out in the NBFC space. Sakshi.
Absolutely, Shell. 440 points higher, 24,185. Let's hope this only gets better from here for the Nifty right there. Swati, could this be the beginning of a pre-budget rally? You know, we missed the Santa Claus rally, but this seems to be now garnering pace. What else will buzz strong if it is truly a pre-budget rally?
Infrastructure, IT, those sectors looks very promising. I believe that we might witness a very strong momentum as well as on the banking sector. These three sectors we are really emphasizing on this particular counters where we can earn a very good amount of money as well as which will show a good rally on the high side. Yes, till the mid of the 15th of Jan, we might get a clear picture of the budget outlook as such, but till the time yes, as per the expectations, the market will show its rally on the higher side. Probably it might we might see the discounted rally in the Nifty as well, but on the budget day we might hit some sort of a profit booking at the higher levels that we already it's a history of the market. We get the pre expectations rally, and after the budget we might hit some profit bookings at the higher level. So as I suggested, better be stick to the stock specific trading, and if you're looking for any sector specific rally, infrastructure, banking, and the IT packs, those will give a good amount of a rally in the near term.
Okay, got that. Well, Swati, then tell us, have you identified also any key stocks for 2025? What is your research saying? Where can investors continue to generate alpha?
Yes, definitely. We have already initiated a very good calls for the 2025. United Spirit looks very good on the technical front. This chart is just trading an upward rising channel. I believe that this particular stock will do a very good amount of a rally we'll see in the near term future, which might take a counter towards to 1800 and so levels. No wonder that today, from the last 3 days, continuously the stock is trading on the higher side. So if you're getting any dips towards to 1600, 1621, can go for a long positions. From the auto pack, we have selected Tata Motors because it's already a beaten down stocks and we are witnessing a positive divergence. So the risk reward ratio is favorable on a low side as of now. Currently, the counter is trading at 765 level. We are looking for a target of 840 to 900 on the high side. So this is the one counter we are looking for a 2025. Another counter is the Jubilant Food, which has already almost hit our target in the last 1 week itself. This counter we have selected because on a larger degree, say on the monthly or the weekly chart, the stock has given the cup and handle formation breakout. We have initiated a buy call at around 640, and so already we have seen a 100 points momentum rally on the high side. But definitely these are the counters which looks very promising for the 2025 levels. From the IT pack, Wipro looks very promising. This particular counter has not shown that kind of a great performance in 2024, but definitely I believe that in the coming 6 months or in the coming 2 quarters, we will definitely see a very good amount of a momentum rally on the higher side, which may take a stocks towards to 400 and so level. So these are the top 4-5 counters we have already initiated a buy call and given a advice for a buying to our clients as well.
Okay.
326, 4 minutes left, and lots of ducks are lining up for tomorrow. It's going to be a positive day as well. Let's hope, Sakshi, that the first week of 2025 ends on a stronger note. Remember, today's weekly expiry on the Nifty has given the right impetus, 1.8% higher on the Nifty. The NSE 500 is buzzing with 1.5% gains. The Nifty Bank up 550 points is 1% higher. And the IT index is up 2.5%. There are indices that are up 3.5% today. Mark my words, this is the beginning of a new phase in the market after 3 straight months of downtick. Also, you have the budget coming up. Therefore, you see lots of firming up in PSU stocks, and of course, you see the rally being widespread in the capital market space. Look at MCX, look at BSE. Both of them are doing pretty well. And of course, the shine is on NBFCs. Very, very strong move coming in. Sakshi.
Absolutely. Okay. Just about 2 minutes to go then. Swati, we will thank you on that note for being with us on this special edition. New Year greetings yet again. May you continue to make more and more profits for yourself and for your clients as well. Thank you so much for being with us on this special edition. A strong day, viewers. Bulls are back on the D Street and the New Year party continues. 24,171 on the Nifty, 426 points higher. That's a strong 1.8% of an uptake. The Nifty back above 51,500 mark too. 544 points higher, over a percent uptake for this one. All the sectors, barring the media stocks, are up and about. The auto space is in the fastest lane that drove the markets in fine fettle today. 3.7% higher for the auto index. Strong volumes could be seen. Consumer durables also pulled up very strongly, almost 2% higher. IT moved up over 2%. These were the three top movers as far as the sectoral moves is concerned. Financial services up 1.5%. Private banks up 1.3% as well. Even the mid and the small caps. Look at the mid cap. They've strongly moved up to the day's high, over a percent higher for the mid cap index as well. So strong moves were seen. iShares, top mover on the Nifty today, 8.5% higher at over 5,300 mark. Bajaj Finserv up 7.6%, Bajaj Finance up 6.5%, Maruti up 5.5% at 11,837. Shriram Finance and Titan, the top movers on the Nifty. Only two stocks were in the losing ground today towards the end of the session, viewers. Sun Pharma and Britannia, the only two stocks that lag behind on the Nifty. Even the PSU stocks, 1.5% higher. Oil India up over 6%, ONGC up 4%, REC, PFC, NMDC, Coal India, over 2% of gains for all of this. Even in the F&O space, if you see, Eicher Motors up over 8.8%, PB Fintech rallied almost 8%, Bajaj Finserv, these were the top movers there. On the lagging front, Jindal Stainless, Petronet LNG, SJVN and Adani Total Gas lagged behind right there. The final print is on your screens, 425 points higher, 24,168 for the Nifty. We couldn't have asked for a better way to start off the expiry session for 2025. Let's hope that this momentum builds on from here and continues to deliver higher returns going forward. We'll leave you at that, viewers. Many thanks for being with us throughout the market coverage of the day. But do stay tuned on Do Business Today. There's a lot more to catch up even beyond the stock market hours. So many interesting things for you up next on your screens. Thanks for watching. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the year-end special edition on Business Today and on Market Today as well. It's that time of the year when all of us are bracing up for Santa to finally come to town, spread some Christmas cheer and usher in good joys for our personal as well as professional lives for the upcoming new year as well. This is also the time when we look back to see what are the key learnings that the year 2024 has brought in our lives, so that we can incorporate all of that and also enjoy the fruits of all of this in the upcoming new year 2025. To discuss and to help us understand how the year has gone by for stock market investors at large in 2024 and what is it that as strategies you can deploy for the upcoming new year, I have with me on this very special edition a very special person joining in to start off and kickstart our new year special series on Business Today. We have with us Ms. Devina Mehra. She's the founder and CMD at First Global. Warm welcome to you, ma'am, and thank you so much for taking the time out. I wish you at the beginning a very happy upcoming new year 2025. May this year turn out to be the best so far for you personally and also professionally, for you, for your clients, and may you continue to give all our viewers through Business Today Television all the gems and pearls of wisdom that you've always shared. Thank you so much for being with us on this one, ma'am.
Thank you, Sakshi, for your warm wishes, and wish you and all the team at your end as well as the viewers a great happy new year in advance. May it be a blessed and prosperous new year for everyone.
Thank you so much for these warm greetings, ma'am. And finally, with your coming in, we can see finally some green on the screen, and that is Cherish 23,834 is coming back. We request you to come more often on our screen so that we can see more green, which has been largely, making us want more of it in the last 5 weeks or so, the kind of consolidation that we've seen in the markets. But your sense, ma'am, how have you been seeing this latter part of 2024? The first half we enjoyed with one-way up move, but the latter half, especially the last 3 months, have actually tested a lot of patience of investors. So put together for us, the key learnings that you've also seen for 2024.
The first thing is that a lot of investors are very new in the market, so they have not seen anything other than a market going up. But that's not the way markets behave. I looked at the data for the last 17, 18 years. There were only 3 or 4 years when the market correction was not in double digits at least. So, less than 10% fall from the top happened only very rarely. And this time, if you see 2023 also, we did not have a double digit correction. And right now, I think we are off maybe around 10% from the top. So it's not something which is unexpected. That's the way markets are, which people had forgotten. I mean, I had people coming and telling me that why are you so conservative? And you should be more aggressive when we want to take high risk. And I said the only thing that is certain with high risk is high losses. High returns are not certain. This is not the way this game is played. So first of all, remember that investing is a loser's game, and this is not just a line for me. It means that your first priority has to be not to lose. It doesn't mean that you will not lose at all. I mean, you will lose it, but you should not take a big hit to your capital. So that should be your first priority. Only when you do that, do you have a hope of making the returns? And long-term data has shown the same thing. I saw data on mutual funds, and it said that the mutual funds which are on the top on a long-term basis are the ones which outperform during downturns. There was one fund, one scheme, which outperformed 93% of the upturn. So when the market went up, it went up more. And yet it was almost the bottom scheme because it could not, it fell more when the markets fell. So this has been a time when this has tested the patience of more conservative investors also, because people think, it's so damn easy to make money because so much has went up during the year, including a lot of riff-raff stocks. So, not all small caps are bad company stocks, but along with the good, the indifferent and even the ugly went up. So that is something which people have to remember, and markets can test your patience a lot longer than the 5 weeks that we have gone through. I mean, the longest stretch I remember is from 1994 to 2003, a 9-year stretch when Sensex gave a net return of 0.
Wow.
And after that, 2003, it went up 6 times in less than 5 years. So that's how markets are. Returns can be very lumpy. So you had a whole decade, that 2011 to 20 decade, when the compounding was just a trifle over fixed deposit. So you effectively got no return, extra returns for investing in equity. And that's why you had this massive bull run from 12.
You rightly pointed out, even in the year-to-date basis, we are up by about 13% for the Nifty. And this is not just marked for this year. Devina ma'am, just wanted to also ask you to add a little bit on this, that, we are again in the 9th straight year of positive returns for the Nifty right now, with a year-to-date return of, say, 13% odd. So I think the question now begins, how long can this continue? And can this continue for the next few years as well? We have a lot of geopolitical tensions, macro changes that are taking place at this point in time. So does one need to further temper down in terms of expectations for the new year, 2025?
See, I never give a 1-year index return target.
Sure,
I never have 30 years, and so because that's a fool's errand. It is something that you not only don't know, but you cannot know. In fact, recently Bloomberg did an analysis because in the US, the data is available for longer, that how do the forecasts and actuals fare for every major investment bank and brokerage house in the world. So it's like I'm talking the Citicorps and the Merrill Lynches and so on. And everybody is off by a massive percentage because everyone likes to sit where, say what everybody else is saying. So if the range is 10 to 15%, everyone will be the 10 to 15%, because if you say 20% and then it is minus 10%, then you are the outlier. So it's better to be wrong along with everyone else.
I think there is some kind of a technical glitch. We'll again try and get back to Devina ma'am as soon as her connection gets okay. But I think what she wants to tell us is that, it's not right really to look at predictions of what next 1 year could really pan out. But it's better to focus on the long-term strategy right there. We'll try and have her back to explain to us. Yes, Devina ma'am is back with us. Yes, ma'am. Yes.
So that was the thing that that you had decade of below normal returns. But also remember that every time there's a bull run of this kind where all kinds of stocks go up, when the correction happens and then again the market goes up, it is often not the same stocks that go up. So anything which is in froth territory, whether it is, as I said, small cap, micro cap in that category, or in between, there are all kinds of themes that come in. I was looking at the defense funds, for example, that came early in the year. All of them have massively underperformed the market because often I say only half flippantly that the themes where there are a lot of new fund offerings coming, it is often the end of that theme rather than the beginning. So that's close to peaking out. So there will be things which have done very well in this bull run, which will kind of never come back for a very long time. But if you look at the mainstream stocks on a 2-year perspective or so, I am not negative. That doesn't mean, as I said, that they couldn't go, the market can't go down another 5%. It very well could. But but it is still time to be invested. I don't think, it's a time to take a cash call because you can't afford to miss out on an upmove. I mean, this year itself, we expected volatility in March, we expected it in June, and it did happen, but it was very short-lived. So at that time, we had bought insurance in form of hedges, which is fine, because then if the market goes up, at least you are invested. So most of the time, it makes sense to be invested to the extent of your equity allocation. Do not put 100% in equity, but whatever is your equity allocation, this is again a study we did, that over 40, 45 years, if you miss out on the 10 best days in the market, you actually missed out on 2/3 of the returns. And if you miss out on the best 30 days, which is not even one day every year, you miss out on 90% of the return. So that is also the flip side. So choose carefully, be in the right sector, right companies, but I don't think I would advise being out of the market. As I said, to the extent of your equity allocation, but temper your expectations. Beech mein toh people were saying that, I don't have too high expectations. I am happy with 25-30% compounding every year. So, I'm okay if you triple in 2.5 or 3 years. I mean, while we have done that in the past, doesn't mean that
I know 25-30% was the average. Like you said, there are a lot of these new investors. They've actually seen so much they believe that this is the norm. That's how in Nifty can actually give you the return. So that's something that we have to really temper down. It's better than FD, but it certainly is not 30% every year. So you have to temper down your expectations there. Devina ma'am, then you did point out very important fact. One needs to identify the right kind of sectors to be in at the helm of the new year again. So any key sectors, themes that you have identified for yourself that you will be deploying all the fresh money that comes in for 2025 onwards, and where is it that you will also avoid? What is it in the risk category even now?
Okay, so we look at everything afresh every quarter. So I cannot say that next 1 year this is what is going to happen. I will tell you where we are overweight as of now, but of course we are coming to the end of December. So another 2-3 weeks we will do a rebalance, so things may change. As of now, where we are overweight is pharma, IT, auto components. So these would be the major sectors where we are overweight. A sector we were overweight for 3 years was industrial machinery and capital goods. Now we are somewhat underweight that sector. We in the middle of the year, we thought maybe FMCG is beginning to bottom out, but that did not really play out. And FMCG is, I think the sector index is now a bit negative for the calendar year. So that would be, we bought a few more chemicals than we had at the beginning of the year. So broadly, that's where we are currently. But as I said, we do a base zero rebalance every quarter because we don't want to be held back by what we thought earlier or what we bought earlier.
Right.
So we look at it afresh and we look at everything on a noise-free, bias-free basis because our artificial intelligence machine learning systems will apply the same criteria for all stocks above 1,000 crore market cap. We don't look at smaller than that. But that's how we rank. We look at stocks and then we select. So we don't want to say that I know what's going to happen for the next 3 years or 5 years. That visibility nobody has.
Right. Could you also point out for us in the upcoming new year, what could be working as headwinds for the Indian markets per se? What is it that one needs to really watch out for with one eye? And what is it that would continue to be as a tailwind?
Well, I mean, as they say, the risk is what you don't see forthcoming. So that's always the caveat because risk is always difficult to foresee in advance. I mean, 2022 beginning, let alone the market people, the Economist had a cover story in January, the 10 geopolitical hotspots. And they did not mention Russia and Ukraine, which the war broke out just the next month. So
absolutely.
I mean, let alone the pandemic, which obviously nobody foresaw, but I'm saying even things which you could have. So that's always difficult to say. In terms of the Indian economy, there are causes for concern. So while people found most of those causes only after the market started correcting the end of October, but I have been talking about it for the last few quarters, and the consumption slowdown did not happen this financial year. It had already happened quite substantially the previous financial year when the consumption number in the GDP was the lowest in 21 years. And you could see that the GDP was running on a single engine of government spending. So that, and of course, this year, this time, of course, the headline GDP number also was that much lower. Consumption slowdown is apparent. And that, again, derives out of the fact that we are not able to find employment. So we talk of the demographic dividend, but the demographic dividend can fructify only if you find jobs for the people in the workforce. And there's a big gap there as we speak. So there are concerns there. But of course, the corporate India and markets are not on a one-to-one correlation with the economy. So I never had this illusion that I heard the people on TV saying that the economy is doing so well. All my friends are buying luxury homes and luxury SUVs. And your friends are not the economy. There are also 80 crore Indians who need free ration. And you see the inflation, the food inflation hurting the consumer basket.
Yes.
So those are so for example, the RBI doesn't have an easy task ahead, I can tell you that.
Yes.
So those are the concern areas, but as I said, it doesn't necessarily translate into bad news for all of corporate India.
Right. Absolutely. So this was what I was coming to about the kind of action that the US Fed is anticipated to take. What do you think slower rate cuts now, shallower rate cuts will mean for an emerging market like India? Therefore, you already pointed out that the task ahead for RBI is not going to be easy because at the one hand, they have to look at inflation, which is not cooling down to their own expected level. There is imported inflation that there is a big risk of as well. Slowing growth is again there is something that they have to really navigate through. Looking at all of these situations, how is it that you expect the fund flows to really react, and what does it really mean for Indian markets going forward?
And for RBI, I would also add managing the currency because they
Yes,
have been
currency.
trying to make sure the rupee doesn't depreciate much. And if they cut rates now, that would be an additional, pressure down on the rupee. So it's quite on all fronts. It is a difficult challenge. As far as the US is concerned, I mean, I had written an article on this after Donald Trump was elected,
Yes.
that people are speculating as to what would happen. But, there are so many uncertainties because
Yes.
even if you look at his campaign, a lot of things are contradictory because you're talking about loss of purchasing power for the ordinary. So as far as Trump is concerned, what he was saying, on one hand, the tariffs, the other side, the loss of purchasing power,
Yes.
they are contradictory because if you push up tariffs, inflation goes up. If you are trying to have a weak US dollar, but a lot of things you're saying will actually make the US dollar stronger. Defense stocks went up with Trump coming in, but he's also saying, I don't want to be the policeman of the world. So there are just so many contradictions. And if you wanted to increase uncertainty, you have Elon Musk in the mix. So as I said, you don't even know what Trump and his team will do. So to speculate on, therefore, what will be the implication for the US economy, then the US stock market, and then what happens geopolitically around the world, how other people react to what other leaders react to what Trump does. And therefore, what is it? It is like all too many possibilities. If you look at, even he's talking about cutting government expenditure. Now, government expenditure even in the US is something like 36-37% of the GDP. So if you cut that, that will be deeply recessionary. Of course, I mean, as of now, I have never been in the camp that Fed will cut very aggressively. I remember beginning of 2023, it was that they will cut in the second half of 2023. I was never in agreement with that. 2024, it was that cuts will start in March itself. We were always clear that it would happen in the second half. So I'm not so surprised that, the trajectory is now not as steep as it was going to be. But as far as Indian markets are concerned, the liquidity from overseas is never really the driver. I mean, this is a question all TV interviewers ask me about flows from portfolio investors. But if you look at, there is not, in 1 month, yes, it can be that the FPI flows go down or are negative and market falls. But if you look at a longer term basis, we have been unable to find any correlation between FPI flows and, what is happening in the markets. Okay. And this I'm talking from the time this flow started, because I started First Global. One of the triggers was the market opening to foreign portfolio investors. So I have seen it right from the beginning, from 1994. And there has no correlation. So, and the biggest, I tell you that statistics, 94 to 2003, the market gave returns.
Yes.
But that was also very time the flows came in.
Interesting. Very, very interesting. Now, Devina ma'am, since you did talk about Donald Trump, I want to then ask you, and you did say that there is only going to be higher uncertainty because we just do not know how is he going to be really shaping the policies and whether that will be benefiting the emerging markets like India or be against it. Is it better then to probably be cautious on the export-oriented sectors, those which have larger exposure to countries like US and the policy shifts there? Should one protect their domestic portfolios in that fashion, maybe focus on domestic cyclicals then?
The cyclicals are not looking particularly great. As I told you, there are concerns on the consumption side anyway in India. And the others, they're most cyclicals, even if you look at somebody who might be selling locally, let's say steel or something, they are price takers depending on what is happening on the global markets. So the policy risk, I would think, would only be for IT services. So yeah, I mean, that is one possible area because anyway, India doesn't export that much, or I don't think India will be particularly on the American radar for cutting back because we are not such big partners on that side of the game, meaning imports for US and exports for India, except for IT services. So that if at all there's a policy vulnerability, that's the one sector where there could be something.
Okay. The other space will also be beyond equities. I mean, with Donald Trump's incoming, we've seen what has happened to the cryptocurrency space. How are you really looking at this space? I just wanted a broader, sense from as an expert. How are you really looking at this space? The way it has rallied, just with the anticipation that there will be favorable regulatory policies. Do you think investors should look at crypto a little differently, with probably the mother market focusing so much on crypto?
Crypto, into my mind, and this has been my view for the last 3-4 years, it is, I don't say that it's not a valid asset class at all, but it's a highly volatile asset class. Even in 2021, I had written that even at that stage that the past also, it has corrected 70 to 85% plenty of time. This is something I said in 2021, and thereafter again it happened. And whatever are the positives of Trump coming in, it are already factored into the price. So, I mean, at this stage, I don't think it makes particularly great sense to get in, number one. And number two, in any case, this is an asset class in which probably you should have 2, 3, 4%. This is not an asset class where you should have 30% of your portfolio or anything like that. So adding little bit, yes, it is okay. It is also, in some senses, it is less correlated with other asset classes. So it adds some performance points. But it's not a sector, not a segment where you should have a lot of exposure.
Okay. And, beyond crypto also, just wanted to understand, what about precious metals, commodities and the other asset classes? How will they be looking, vis-a-vis equities in 2025? With the way gold and silver has outperformed, do you think that outperformance could continue? Because we continue to have geopolitical tensions and, of course, a lot of uncertainties again at play.
Gold and silver, yes, we always do have some exposure to gold, and we added some silver this year.
Okay.
These are segments where you can have some part of your asset allocation, but not a huge part, because it's not that gold is a particularly safe asset. This is only a myth that we have. So if you look at the dollar price of gold in the early 80s, that was not breached for some 20 odd years. And there was a 60% reduction in the middle. The next peak, again, there was a 40% loss in the middle. So it only looks good in rupee terms because the rupee has been depreciating. And earlier, and our grandmothers were right in that, it was good to buy gold because that was the only currency hedge available. But that is not the case now. Now you can, the liberalized remittance scheme, the LRS scheme of the RBI is quite generous, and you can buy other assets and not just gold internationally. So gold has not proven to be a safe asset in dollar terms. It is only the rupee depreciation that makes it look good. And one of the things for the new year I want to leave your viewers with is that please look at global diversification and real global diversification, because just buying a US index is not good enough, because US also will not outperform forever. This is also something people forget. So, but a global diversification is essential. I mean, when I started working, the rupee was, the dollar was 12 rupees. Now it's 85 rupees. So so if you're talking long-term financial planning, you cannot forget this fact that there was an 85% depreciation in the course of less than a career. So if you're talking about your retirement goal and 20-year hence goals, global diversification is key to that. Absolutely. And just gold is not good enough.
Okay, wonderful. Well, it's always a pleasure to listen to your words of wisdom, ma'am. And thank you so much for sharing all of these thoughts, wonderful ideas with all our viewers. Global diversification is something that we ourselves will also focus on in 2025 to bring in that extra aspect to all our viewers. We'll take it up from you as our own mandate as well, to bring in certain shows which focus on global diversification as well. Many thanks for being with us, as always, throughout the entire year of 2024, sharing these pearls of wisdom, and again wishing you a very happy and a prosperous new year, ma'am. Thank you so much.
Thank you, Sakshi, and a great new year for all of you.
Thank you so much. All right, viewers. So there you have it, a wonderful conversation with Devina Mehra, having a wealth of experience of over 3 decades in the Indian stock markets and global markets as well, sharing with you what is the best way to approach the markets as we head into the new year 2025. We promise you that there'll be chunks and bits of her interaction throughout our website and on our YouTube platform, on our social media as well. So don't forget to catch on to all of that. And throughout the day today and from today onwards up until the New Year's, we are going to be getting you the best of market voices to explain to you what is it that you should learn from 2024 and where is it that you should do better investments in 2025 as we go forward into the new year. Thank you so much for being with us on this one. Hello and welcome to a very special show, the Economic Compass 2025. As the sun sets on 2024 and dawns on the new year, a lot is at stake. The clock is ticking on India entering the $5 trillion economy club in the next 2 years. But are all ducks in the row to make this truly a reality? The economy is chugging along pretty strongly with interest rates expected to fall in the next few months as well. There are, however, some headwinds which threaten this sunny outlook. We have a distinguished panel of guests to discuss all of these and more issues. But first, here's a brief look at the economic past, present and future.
भारत 10 साल में दुनिया की 10वीं से 5वीं बड़ी इकोनॉमी बन गया।
It was a year when India maintained its status as the world's fastest growing major economy. With forex reserves at a healthy $650 billion, GST collections reaching new highs, and major stock indices up more than 8% on year. It was a year when India lost Ratan Tata, its biggest business Ratna. It was also a year when the country witnessed its grandest ever wedding and saw continued allegations and attacks against the Adani Group. 2024 also saw the re-election of Narendra Modi as Prime Minister for the third time, saw political parties throw fiscal caution to the wind and promise freebies to get votes, and also saw the election of Donald Trump as the US President for a second time.
If India charges us 100% and we charge them nothing for the same, they send in a bicycle and we send them a bicycle, they charge us 100 and 200, India charges a lot.
In 2025, it is this 78-year-old who could switch gears for the world economy. His threat of tariffs against America's biggest trading partners, his promise to create a strategic national Bitcoin reserve,
The Bitcoin is going to the moon, as we say it.
and efforts to make the US dollar great again will set the direction for the global economic compass in the new year. Meanwhile, the newly discovered calm at the LAC between India and China, first with Modi-Xi meeting in Kazan and then NSA Ajit Doval's trip to Beijing, could signal winds of change for trade ties between the two powerful neighbors. What will also spin the compass in 2025 is the very real possibility of a rate cut on the Mint Street in February. This comes even as India's GDP growth fell to a 7-quarter low in the July-September quarter, sparking worries about the manufacturing sector. This also comes as the US Federal Reserve indicated that it may slow the pace of its rate cuts next year, which along with selling by foreign institutional investors is making the Dalal Street nervous. Another major worry is inflation, particularly high food prices which cloud the economic horizon in 2025. India, however, still remains a bright spot in the world economic map and Budget 2025 is expected to place more money in the hands of the consumer, giving a consumption boost to the economy. Bureau Report, Business Today Television.
And now let me introduce to all of you to our top guests on the show. I'm joined by Aditi Nair, Chief Economist of ICRA. She will be sharing with us the true state of Indian economy at the current level. At the same time, she will also help us understand where is the Indian economy headed in the new year 2025. A warm welcome to you, Aditi. We also have with us Sugandha Sachdeva, the founder of SS Wealth Street, who will now be sharing with us an outlook on commodities and currencies. That's gold, silver, rupee, and even a bit of Bitcoin is what we will understand. And we also have Mr. Sudeep Bandyopadhyay. He is the Group Chairman of Indie Trade Capital to share with us an outlook on the stock markets and where should you be investing your money in 2025 for great returns. Warm welcome to all of you. Season's greetings and thank you so much for taking the time out. Aditi, I'm going to start off with you. Tell us what is really impacting growth in India and more importantly, will this be a continued risk of further slowdown in the new year?
Thank you, Sakshi. Well, we do think that the Q2 print was probably the trough, and now we expect that growth prints are going to look better in Q3 and Q4. Specifically, there were a lot of transient factors that did have an impact on the pace of growth in Q1 and Q2. Between the elections, the heat wave in Q1 and excess rainfall in Q2, some of these factors, of course, are behind us now, and so we don't expect that disruption going ahead. We have our ICRA Business Activity Monitor, which is a compendium of 16 high-frequency indicators, and that's showing us that the pace of volume growth has improved in October, November as compared to Q2. So that is one of the reasons that we're hopeful that the growth prints are going to look better. Also, we are awaiting more data, but there is a lot of headroom for government capex to grow in the second half of the year. And if that comes through, then that certainly will be a supportive factor to growth. Rural demand should also be more steady now. That we have a reasonable Kharif output, Rabi sowing is on track, and reservoir levels are fairly healthy in most of the regions. So this is another reason why we feel that H2 growth will pick up. Overall, we're looking at a GDP growth of 6.5% each in FY25 and in FY26.
Okay, got that. In fact, we also spoke to Mr. Neelkant Mishra. He's the Chief Economist at Axis Bank, and he also shared his outlook on the growth in FY26. Let's listen in to what he had to say.
We expect that as the year progresses, we should see a steady improvement in the economic momentum, and FY26 should be closer to 7% real growth.
All right. In fact, now let me just go across to Mr. Sudeep Bandyopadhyay. I'm coming to you next, sir, to understand a little bit more detail. Tell us what are the big learnings that investors should take from 2024 and what is the outlook on 2025? Will we continue to have another year of strong growth or will we have to temper down our expectations?
Look, there are a lot of things which have happened over the last 3-4 months which have led to a certain amount of realism coming back to the market. One is, of course, there has been massive withdrawal from Indian markets by the foreign institutional investors. We have been talking about China becoming relatively attractive and things like that, but that's a very small part of it. I think the fact remains that the mother market, which is the US market, has been providing fantastic returns, and a lot of money is going back to US with Donald Trump coming back as president and US economy getting preeminence in the thinking of the political class in US. I think money will also move back, a lot of money more move back to US from multiple geographies across the world, and that includes India. So we have to brace for that. The second factor is, unfortunately, we are also going through a bit of a slowdown, as you have been already pointing out, and the economists in the panel as well as experts have been pointing out that I think the Q2 wasn't good. Corporate results was also not good. And we are not expecting any great Q3 numbers as well as things stand now. So under the circumstances, the valuation at which Indian market was looking a bit stretched, and bit of correction has happened. Some bit of correction may still happen going forward. So we have to be a little realistic about the market expectation in the next calendar year. I'm not saying it's all gloom and doom. I think, as you rightly pointed out, interest rates in the economy are going to come down, and that should give a growth a fillip. We also have a lot of capital expenditure which is planned by the government, and private sector also is joining. So that's also good. And finally, I would say is that corporate India has learned their lessons from earlier slowdowns, and a lot of belt tightening has happened. I expect Q4 onwards, corporate India also should start producing better results. Now, all this should add towards a positive bias in the market going forward, but it has to be a stock pickers market, and we have to remember that.
But a double-digit return, would you expect that, or should one rule that out?
Well, double-digit return is definitely possible because we are expecting an EPS growth which is in double-digit. So return should be double-digit. But I would say is that one has to be extremely stock specific in this matter as well.
Sure. Okay, Sugandha, let me come to you. Your sector really outperformed this year, 2024. Gold and silver outshone all the other asset classes. I mean, 27% returns for gold this time around as well. Tell us, what is the outlook? Should one actually go all in? Probably the large part of portfolios should be allocated towards gold and silver even in 2025. What's your expectation?
Hi, Sakshi. Thanks for having me on your show. And season's greeting to you, my co-panelists, and all the viewers. So talking about gold can flaunt returns of around 27% in international markets this year and around 21% at the domestic market. A lot of factors have contributed to this massive run that we have seen in gold prices, be it the robust central bank buying, the easing by major banks, especially Fed, which has started its rate cut cycle in September and has gone actually very aggressive and have almost cut by 100 basis points. So these have been the two major catalysts. Apart from that, geopolitical tensions have driven gold prices to record highs this year of around 27.90 per ounce and around 80,000 mark in the domestic market. This trend is likely to continue in 2025 as well because there's a lot of uncertainty after Trump assumes office on 20th of January. There are a lot of concerns about fiscal uncertainty as well as the tariffs being imposed on Chinese goods. Alongside this, geopolitical worries are likely to continue in 2025, and central banks which have been diversifying their reserves away from dollar, this buying is likely to continue in 2025 as well. So in 2024 till quarter 3, central banks have already loaded up on around 694 tons of gold. They're actually moving away from dependency on dollar. This is likely to continue in 2025 as well. So a lot of factors are contributing, but yes, we have seen some pullback of sort in this current quarter, majorly driven by the strength that we have seen in dollar index after Trump's win in the US presidential elections. So this could be a slight dampener. So we cannot expect similar returns that we have seen in 2024, but yes, gold is likely to remain in demand in 2025 as well. And we are expecting returns of around 10 to 12% in 2025. So yes, talking about your question, gold should certainly form a part of everyone's portfolio as it acts as a hedge against the depreciation that we are seeing in fiat currencies. A lot of volatility surrounding the geopolitical risk. So one should certainly allocate 10 to 15% of their portfolio towards gold in 2025 as well.
Right. So Sugandha, simplified for our viewers on India today. For gold and for silver in Indian rupees, what is the level that you're watching out for towards the end of 2025 then?
In terms of the levels that we are looking at, on the downside, gold prices are likely to remain supported by 68,000 mark. And on the higher side, we are looking at levels of around 84,000 for 2025. Overall demand for silver in industrial applications has been rising significantly, especially the solar panel sector, industrial applications like electronics and electric vehicles. So this is likely to keep silver also in demand. Yeah. And this year, prices have been able to break this ceiling of $30 per ounce. So this is likely to work very well for silver prices in 2025 as well. Overall, we expect silver prices to test levels of around $40 first and then $42 per ounce as well in international markets. In terms of the domestic market, we have a near-term resistance at 1 lakh mark. Once that is surpassed, we are looking at first levels of around 1,10,000 and then 1,25,000 mark is also a possibility at the domestic market.
All the economists are also looking out for how Donald Trump's 2.0 and tariff talk will impact Indian economy. Even before we've actually seen Donald Trump take office, there's already a lot of hullabaloo happening around which are the countries that are going to be on his top radar. It's not India that surfaced so far, but what could be the likelihood that India will also face the brunt of tariff talk, Aditi?
Firstly, we'll have to see whether tariffs are imposed across the board or are they imposed on specific countries. And I think that is going to be the key for us, in terms of understanding what could be the impact on our exports to the US. Now, my sense is that obviously, heightened uncertainty in the coming year. But if we take a broader look at the current account deficit, for instance, for the current year, we are looking at a current account deficit of 1.3% of GDP, which is building in this record high trade deficit that we got in the month of November on the back of the gold imports, which news reports are suggesting may actually need to be corrected to some extent. So I would say 1.3% of GDP is our outer limit for the current account deficit for FY25. For FY26, we have a couple of rules of thumb that we're working with. One is that service imports will outpace merchandise imports growth. And the second is that merchandise import growth will outpace merchandise export growth, because we do think that domestic demand is going to grow faster than global demand, and especially given all these tariff-related uncertainties that we're talking about. Having said that, as of now, we're looking at a current account deficit which is closer to 1% of GDP in our baseline scenario. So even if the tariff-related concerns upset it a little bit, we don't expect the current account deficit to exceed 1.5% of GDP in FY26, which is a really very manageable level. It's not a level which is going to cause a lot of concern.
Okay, got that. Coming to you, Sudeep, I think the big question that all investors really want to understand from you is what, where to put in their fresh funds in 2025.
Well, I think as far as sector is concerned, one sector is related to the tariffs. I understand that the tariffs are a reality, and Trump has been talking about day one the tariffs will come. And I'm reasonably confident it will be differentiated tariff. And, the differentiated tariff, to my mind, will benefit India, particularly India's textile exports in a big way, because significantly imposed on China. Indian textile manufacturers, exporters will benefit in a big way. So that is one sector which can definitely be looked at for 2025. The other sector may be a bit contrarian, but I believe that IT will do well. Make USA great again has a implication of a lot of spending in US, and this will be led by financial services, manufacturing, and others in US. And some of the Indian top IT companies have a significant presence in US BFSI, US manufacturing, and to my mind, they will have a even further robust order book and excellent margins going forward. So as far as Indian IT, I think it's going to be a good year. Yes, they will have some visa-related challenges, but they have navigated that earlier during first Trump presidency, and they will, I'm sure, continue to do that going forward as well. So these are the two sectors which I'm particularly bullish because of what's going to happen in US. As far as sectors beyond sector specific stocks are concerned, I like insurance-related stocks. A lot of reforms are being proposed in insurance. One of them is, reducing bank insurance significantly. Now that benefits LIC disproportionately, because LIC's bank insurance percentage is very small. Others will be disadvantaged. LIC will gain out of this measure. The second measure which is being talked about is life insurance companies will be allowed to sell non-life products and vice versa. Now, this again benefits LIC disproportionately, because the kind of network LIC has, tomorrow when this is permitted,